Good morning. This is your morning update from London, and we start with the French CAC index on an hourly chart, all the way from the highs in mid-March. I believe that at the very least we have the third wave finished. The third wave started in the final weeks of March, here at about 35-30 level. The third wave, if correct, has finished roughly here. You have a very neat 5-wave impulsive pattern here. If that view is right, that we will see a fourth wave consolidation that could rise potentially up to 7% higher from current levels. This consolidation can last between 1 and 3 weeks, and after that we will see the final fifth wave lower that will take us to a new low, so a move of greater than 8.5 to 9%. There is a possibility that the whole move down has finished. In that case, the third wave will have finished roughly here. So we would have a 1, 2, 3, 4, and 5. If that is the case, then our correction higher will go much, much further, possibly to 3,400, even as high as 3,470, and that will give us about 11 to 12%. In that case, correction is likely to go on for a month or possibly 2. In either case, right now we have fairly good buying levels for a decent bounce. The second chart is of the dollar Swiss. Let's look at the dollar HUF first, dollar Hungarian forint. If you look at the last update, I have expected a top around current levels here and a C wave down to be comparable to this A wave down, so between 8.5 to 13%. I believe that the high here marked with a down arrow has been traded, so we have a wave 1, an irregular correction, and a continuation of this downtrend is to be expected very, very shortly. On the dollar Swiss front, we have likely had a massive 5-wave impulsive pattern from the summer of 2011, 1, 2, 3, 4, 5. Since then we had wave A during January and February of 2012, and a wave B during March and most of April of 2012. Wave B is likely taking shape of a contracting triangle, A, B, C, D, potentially wave E that is over or could extend to about 92 or so, from where we would expect a big drop to about 0.85 in wave C. It is also possible that wave B itself will have a contracting B wave triangle, A, B, C, D, E, in which case we should see a nice little rally higher in wave C of B. So wave A of B, contracting triangle, wave C of B, and a C down. I think right now it's safe to assume that we have the whole wave B here in this contracting triangle, and so 92.50, this level here, provides fairly good stop loss level for shorts in dollar Swiss. And that will be all for today. Thank you very much for listening, and I hope to see you again.